Good afternoon, everyone. We are back to another Treasure Week, which is a very traditional event for Santander Treasury. We have been doing that for many years. That's the second year we have been having that live online. Yesterday we started that because of COVID. We lose some things and gain some things with this format. It's always good to be in front of people and feel people's reactions when we speak, and also the audience can react more assertively when you are there in person speaking at the stage. But on the other hand, we have some upsides and downsides. The upside is that we can reach a greater number of people. People can go back and watch our lives later. The downside is that this is recorded. And I was recalling our live broadcast from last year, and we see how much we made mistakes, 2020, major concepts just imploded. What many people thought at the beginning of the year and what we actually saw by the end of 2021 was very surprising. And what was most surprising, I believe, for everyone, even for those who had the most pessimistic view on that, is inflation. I believe that inflation has become a topic that hasn't been so debated on television since 2014, 2015, having like the prices for meat or for tomatoes. It's a subject matter that's not only present here in Brazil, it's being discussed in the United States as well. It's being impacting the popularity of the American president. And at the beginning of the year, many people bet that Real, after a terrible performance in 2019, 2020, there would be some sort of relief. We didn't have any kind of depreciation, exchange depreciation. It was a negative surprise. And once again, Brazil, even though it left the pandemic or is leaving the pandemic in a surprising way, we were able to close our gap for the drop last year. Our economy ends 2021 in weak kind of position, but we almost had a break in the fiscal system. For the past 3 months, we have seen the drop of a stock exchange and increase in interest rates because of the PEC dos gastos, the bill on expenditures. So a lot of people are frustrated. A lot of people are upset about all that's happening. Part of that is due to the external scenario, but a lot of it has to do with the decisions that have been made here in Brazil and the resulting scenario here. So here with us, we have Edmilson and Adonai helping us with a sign language translation. And we have here three friends who are friends with whom I'm interacting a lot throughout the year. We have here with us Tony Volpon. Tony Volpon was a director for the Brazilian Central Bank. He's a very influencing person in the market. He's working for WHG. Their focus is management and allocation for private investors. So it's important to hear what Tony has to say, not only due to his experience with the central bank. It's going to be interesting to hear him because he has experience with fiscal crisis and inflation that at some point we thought that wasn't going to drop. And part of the drop of the inflation started during the administration that Tony was part of. So we would like to hear what they have to say for next year. The allocation of the retail and the private clients is very important. Much of what has happened at the stock exchange and fixed income has to do with, this migration on platforms going from asset A to asset B. So Tony is influenced not only because of what he thinks, but because of what he's done. Our second guest is Fernando Villa. He is a great friend of mine. He has a proprietary kind of a mind. He is globally responsible for Louis Dreyfus Market, one of the largest commodity companies in the world. He has a very opportunistic view of things, so he could give us a trading view and how assets are behaving. Villa has been a specialist in the options and foreign exchange market, so we are going to talk about foreign exchanges. And last but not least, Bruno Magalhães. He was our client for a long time when he worked for Autonomy, one of the largest hedge funds worldwide. The main partner there, is a legend in the market. Bruno has a wide experience working with a foreign manager that always have a different market flavor. 5 months ago, Bruno, together with other executives, put together Externa, a new resource manager here in São Paulo. He has other people with him that are heavyweights like the Deutsche Economist and others. So what we want to hear from him is how the newcomers are positioning themselves in this scenario, since the year is coming to a close and will start 2022. So as moderator, I'd like to get us started. I'm going to ask each of them a question. We have more or less an hour. And I believe that in the first round of questions, perhaps we'll be using the totality of our time. And if we have time left, I can ask more questions. So I'm going to condensate the questions so each has at least 15 minutes to tell us about what they think. Tony, our first guest, our first question. Tony, you have lived through a situation similar to now, for different situations, but the Brazilian situation at the end of the Dilma administration was a scenario that had consequences very similar to what we have now. First of all, there was an issue of credibility and trust. People didn't have a good view of the future, and that led to an expressive downturn in the foreign exchange. We had acceleration in the inflation, something that hadn't happened since 2002, the first election of the Lula administration. They were telling us that we couldn't raise the interest rates, that the situation was out of control. At that point, you increased interest rate to 14% and some, and once again, Brazil reaped the fruits of having a central bank that was independent, if not by law, by practice. And at that moment, we had an economy that still had good or better numbers of unemployment. So my first question for you, Tony, is I'd like you to draw a parallel between what you have lived and what we are living through now, and what is the central bank doing, and are they doing the right thing? Should they change course? Should they go faster or slower? And how do you at WHG, how are you suggesting that your clients position themselves? Should they send funds abroad? What should they do? As a policymaker and as a traditional economist and as a portfolio manager and advisor, how should people be positioning themselves for 2022? How is the thing going to evolve in your mind? Well, first of all, thank you very much. It's the second time I participate in a live event at Santander, and I would say the following. Well, we have many different scenario differences. The temper tantrum in 2013 was the start of everything. It was a upward cycle forced by external situations. I wasn't at the central bank in 2012 and 2013. They had a really low interest rate. The indications were that the unemployment rate was below the neutral line. We had a pressure for services, and we had low inflation of managed prices because there was major interference at Petrobras, which was holding back the gas prices. And there were also interferences with the power rates and tariffs and all of that. The central bank was keeping quiet. They didn't comment. And I criticized Tombini because of that. I like him very much. And he knows I criticize his demeanor at the time because they didn't take into account what was happening in the work market and also this pressuring down of public tariffs. The cycle started in 2013 slowly. By 2014 they wasn't raising interest rates anymore. We were a little bit outside of the market, even though the inflation was still going up and down, but it was closer to the upper limit of the threshold, but it didn't cross that threshold. And then we had the election, and the job market started deteriorating a month after the elections. I don't know why that happened in that way. I remember that at the time people said that, you know, they were labor holding on to the positions. You didn't want to fire people because unemployment rate was very low. So, you know, I think the central bank was waiting to see what was going to happen. I even believed that, you know, Aécio Neves would win that election with Armínio Fraga as head economist. But when Dilma went up at the end of the election, then unemployment started rising. And when we come to 2015, by then I was already with the central bank, the superheating of the job market was clearly out the door. We were already facing a recession. The recession started in 2014, not 2015. And we can't forget that were major tariffs imposed by Joaquim Levy, the Ministry of Finance. So everything that happened in 2012, 13, and 14 was corrected or adjusted all at once. So the inflation went to 9-10% due to that. It's worthwhile that we remember that, and that's where I draw the parallel, because we don't have a clear control of tariffs or fees by the administration, but we have external pressure. Also, we had a drought that year that affected commodities and foods, so everything was working against us. Economy was decelerating. GDP was opening up, so there was an increase in interest rates at that time. And then later we had like fiscal policy, fiscal dominance, all of that. That was in June of that year. And then the government decided, without the approval of Minister Levy, introduce a budget with a fiscal deficit, something that hadn't been done for many years, ever since we adopted the surplus as an anchor. No other administration had a fiscal deficit. So from then on, all budgets that we have been seeing have had a fiscal deficit acknowledged as part of their planning. But anyway, at the time, that was a shock for the market. I believe that people didn't have any idea of the size of the issue the economy was undergoing and how that was bringing down this tax collection, creating the fiscal deficit or the tax deficit. We all felt that, you know, Joaquim Levy would be a positive figure to give us the turning point from a tax standpoint. Looking at what Focus said and what Joaquim was saying at the time, we all thought that we would have the primary surplus back in 2016. That was our plan right then and there. But as we moved through the year, we realized that that was not going to happen and that we needed structural reform. We needed to look at Social Security. It was not just a matter of changing fiscal policy within the existing fiscal policies or within the existing legal policies. You know, it was an administration that became highly unpopular. Dilma's popularity went up a little bit before the election, but then it dropped sharply. You know, there was high levels of unemployment and all of that. She started to lose her ability to pass any bills in Congress. She started a war with the hammer of the Representatives House. So she really didn't have much to do. And when we saw that, we realized that the expectations were being taken. There was a pressure on the foreign exchange. The currency went up to 4. Current accounts were improving greatly because of recession, which represses the fear of imports. So when looking at that, we didn't see any major news or major new necessity to increase the interest rate. I don't know if at the time I went back several times to increase the interest rates even higher. One or another member of Volpon would agree with me, and I was doing that in part because of what was happening due to the expectations, and in part to make it clear that we were not. The central bank limitation was not due to fiscal dominance, which was a crazy theory then and it is now. It was not what was going to stop us from using interest rate if we wanted. So I believe there is great similarity to what we are living through today. The major difference is that we never had negative interest rates as the central bank actually did have for a very long time. That was clear from early last year. We knew about the vaccines by October. We knew that we would have a very positive cycle in the global economy due to the resumption of everything, due to the vaccines. But unfortunately, our central bank, as other central banks, decided to talk about transitory inflation, something that would be quickly resolved with the rearticulation of global supply. And, you know, they were feeling at ease to have that interest rate without paying attention to the increase in demand and combined with the reopening, all the fiscal policy created here in Brazil, the United States, and other places, led to an inflationary issue. In January, I read at a news media that we were making a major mistake in terms of diagnosis, and that would bring inflation. And the combination of negative interest rates with, you know, letting the FX do whatever it wanted to do, what we had was a major devaluation combined with a positive shock in commodities. So that created a primary shock, a huge primary shock due to the inflation with heavy demands at the time. When I look at the inflation now, I just keep thinking that this is actually the result or the fruit of what happened right then and there. When you look at these factors right now, they have, you know, opposed signals like economy is not growing strongly. We can see that from the GDP. And nominal FX rate is stable, is disciplined by the increase in the interest rate, is not reacting crazily like at the end of the year, beginning of this year, but you know, it's around 6, and I don't think it's going to drop from that. With all the bad news that we have had, you know, there wasn't any increase, so I think it's not a factor to push a new inflationary shock. But why are expectations going so high in Brazil? And there's another article when I talked about that. When we talk about, detaching our expectations from what's actually happening today, is that the fruit of an argument on what is happening? What are the underlying factors that demand the aggregated demand? Or is it an expression of, the unhappiness of the market with the tax and fiscal issues, not being anchored is the end of the world. Let's put our expectations way up high. Well, I think that would be a mistake, as it was in 2015, and I hope that the Brazilian Central Bank, I know that they cannot say that, they are not going to pay attention to focus or anything like that, that they are going to think about added economy, but, we should discount some of these things differently from the expectation of increase that we had in 2014 when you had like overheated job market. Now I don't see what would be the foundation. So I hope that the Brazilian Central Bank, instead of leaving the interest rates too low, are now going to make another mistake in taking the interest rates too high and detaching the expectation for inflation. About what we are recommending to our customers, WHD does have international allocation. We believe that Brazilian investors should have part of their money invested abroad, not necessarily at an FX risk, but you can do that with many products without that risk. When you have the Brazil risk manifesting itself as it happened in October, everything will drop and there is no hiding that. The only thing to minimize those risks, and I don't have the possibility of predicting when Brazil risk will come in, is trying to allocate things abroad. And when we think about the fixed income and the variable income, fixed rate should be here in Brazil. Interest rate is going up. It's going to be 12-13%. That's going to bring the inflation down. And as the inflation comes down, there will be relevant gains in fixed income. So in 2016, inflation peaked in January. They cut the interest rate in June. And then Ambina raised 20%. I don't know if we can still do that in 2022 because we are going to have turbulence due to the elections. But when we look at abroad, I would bet on fixed income for Brazil. And in terms of American economy and others economies abroad, you have the Fed that's going to make a monetary adjustment that it's still more aggressive, but still very soft. So the worst expectation is something that's very soft, that's going to take a long time to impact the added demand. So I believe that they are not going to see the raises that we saw this year. Is a good positive perspective for the American stock exchange. And our stock exchange here is finally very inexpensive, but it's a value trap. It is cheap now, and it could be cheap for a long time. It would need a trigger to start rising more consistently or going up more consistently. And I haven't been seeing that. It could be a third line or a major drop in inflation, having people here in Brazil, you need triggers. In the United States and in parts of Europe, you need a trigger for it to drop. So between a stock exchange that requires a trigger to go up or to go down, by inertia, let's stick with the one that will go up by inertia. And when you have that type of shock, that is a good point to buy things and expand your position. I hope I didn't overextend myself. No, said Sandro, it's okay. Tony's question was a difficult one, trying to forecast. We are in a very complex situation. When inflation breaks the two-figure number and the interest rates are up, the inflation hasn't dropped yet. the FX that I thought would react better to the increase in interest rates, because I always said that it was based due to a mistake in fiscal policy and monetary policy. On the other hand, Villa, what we have seen this year for the first time, if we compare to the past 3 years, 2018, 19, and 20, for the same period, the FX flow in Brazil was all outbound. It's the first time that we have inbound money coming into Brazil. Brazilian current account, even though the low FX, it's still in a deficit, but not that relevant. And my question is for you. Why has the FX depreciated so much, has gone down so much, and why can't we get it to get corrected? I mean, there are some models here that show this detachment for over a year. The detachment is not helping us. We still have depreciation. So I would like to know about your point of view regarding the real. Because we are not an island, we are still connected to the rest of the world. How do you see the dollar in 2022? It's a cycle type of story. There are moments when it's super high, moments when it's super low. We have had a strong dollar for a long time. Right now it is expensive. We have like a dynamic economy, vibrant economy. The stock exchange is going up there. First country not to increase the interest rate. So how would you see the real in 2022? And if you could draw, a map of allocation of the Brazil risk, how do you believe we should start the year, and how do you think that's going to evolve throughout next year? Thank you for this tough question that's going to be recorded for posterity forever. Tony talked a lot about that, so I'm going to bring you some more context in terms of FX, okay? If you think about the past 12 or 13 months, it was very difficult. They were very difficult months for people who want to hedge themselves with the FX. Several things stopped working. So first we had like the vaccines around October. We had the result of the American elections. We started the inflation trade, the expectation of major fiscal packages to recover the economy after COVID that pushed commodities high. So we had, iron ore, soy, corn, oil, all of those things that Brazil exports, their prices have gone up 30 to 80%. So what would you normally see with that? Trade arrangements are very favorable to Brazil, and not only Brazil, China, Russia, South Africa. So, these currencies should be increasing, should be going up, because the trade result would be a positive one. But that hasn't happened. Why not? Because the interest rate was negative. So the traditional investor thought, I believe I would like to invest in commodities, but perhaps rather than buying it directly, I'd like to go to an emerging country who for the first time answered to a crisis with a dropping interest rates. But Brazil was perhaps one of the most aggressive. With negative interest, the capital didn't come. So that would be a first explanation right there. In terms of favorable exchanges, the interest rate was negative, no money came in. For the past 4 months, the emerging central banks, the emerging countries' central bank, changed course. They realized that transitory inflation due to supply chain, the mess created by COVID, wouldn't go by that quickly. And there was a change in consumption patterns that perhaps it's a little different from what was expected. The Brazilian Central Bank, even though it took a long time to react, to increase the interest rates, perhaps they should have started that 2 or 3 months ago, given how low the interest rates were. They should have worked that out sooner. Now what we have in terms of real effects is in the vicinity of 5.25%. Many countries did that, and they didn't have like a more positive interest rates, actual or real interest rate. I believe that from a standpoint of global portfolio, people are not coming to emerging countries. What companies grew humongously in the past few years? Technology. And which kind of company is established in emerging countries? We have a lot of commodities and banks, and we are just not present in the shareholding in this. So we stopped having a flow dedicated to emerging markets, but also we saw that places, the class of assets that were being offered didn't include what they wanted to buy. So they started sending money abroad. The Brazilian Central Bank said that it was something like 13 or 14 billion dollars that were used to invest in American stocks, cryptocurrency, and assets not available in the local market. And I believe this is not a Brazilian phenomena. This happens in general. I think the biggest overrate worldwide speaking is the Brazilian shares that has been working in the past 3 years as a major vacuum cleaner of dollars or external savings towards the United States. So I believe that's what holding up the dollar cycle for so long. If we were to think 5 years ago, the interest rate, the actual interest rate for them, for TMP American for the past 10 years, there would be a guarantee of loss of capital. And there's always the fiscal issues that we are very worried about. So we have deficit levels that would make us concerned about the fiscal dominance. So the deficit of major countries is huge. So we would expect that perhaps, we would reverse the cycle. Why don't I think it happened? Well, due to the technology company phenomena that absorb all human capital, global capital. I think Brazil is very inexpensive right now. Some companies create boxes, for example, manufacture boxes and return the market cap in a year. So, this would be allowing us to have some flow. Interest rates are no longer in the wrong target. Something like 10, 10 and a half, 12 would be okay. We have an actual interest that is very positive. And with that, I believe that the AFAX should stop depreciating. So a lot of the money that was being reallocated abroad perhaps would be invested in fixed income. Perhaps we could have 3, 4, 5% pre-approved for next year. This is going to be a good anchoring for the currency. Of course, there are many things that could happen in the meanwhile, but I believe that the scary is going to be received by the investor. In terms of other currencies, I believe that this is an asset class that's very penalized. I believe that the global view is not with them, and we have seen some technology companies, some recent ones in the United States, are starting not delivering what they had promised. So I believe there might be some global reallocation of these portfolios. I think the main deciding factor to see if the dollar cycle will continue or will end is the Fed. After the indication or the nomination to Fed, he started talking about a more resilient incentive. He started bringing down and accelerating things by increasing interest rates. The Fed still had one possibility of interest rate, and the last time we talked about that, I believe that we're going to have a dark plot in December. So if Fed can deliver that, if the Fed can deliver that, then the strong dollar might extend a little bit. If not, this amount of tax incentive and monetary incentive will be problematic. So I think as we withdraw the monetary incentives accelerating in April or May with some sort of increase in interest rate and with a fiscal aspect that is, less something to be done in 10 years. So like next year, the fiscal impact would be less. So if you consider all of this withdrawal on the part of the United States, will weaken the economy. Perhaps we are undergoing this turning point and Fed might not be able to increase the interest rates or do it only once or twice, and that would benefit the other currencies in terms of their comparison with the dollar. I don't know if you asked me anything else because you have another 5 minutes and I should have asked you about that. Our audience here is more corporate. And the one decision in the year is if they should hedge or not. And I remember that when I started working in the financial market in the foreign banks in the 90s, even though the interest rates in Brazil were very high, these companies just thought of everything in dollar, They didn't care about, how much the interest rate was. And with the stabilization in 2003, 2004, people started thinking in real. So hedging was no longer an option. And people who took a long time to realize the change in that. And I believe that some companies are bothered by that because their equity and their results were corroded by the FX. And the reason is what you just explained. The interest rate was negative and the central bank was saying, well, I'm bringing my exchange down for you to make that hedge. So considering 2022 and considering the scenario and what Tony has said, and because of the FX, because the market hasn't been able to create the new highs, how would you see the hedging policy? Because the fiscal coupon is not reacting as it should. So if you were the CFO of a company, how would you operate this company straight balance considering, if they are an importer or exporter? As I said, I believe that the interest rate higher they stop answering to negative answers. Now, regarding the hedge, I believe companies are going to change their policies. Ever since 2015, 2016, when the corporate sector was highly indebted and suffered greatly with the exchange devaluation, there was a disacceleration that was massive. Many companies, but two of the main corporates in Brazil were very leveraged. Some had private activity and, it was all thrown in the trash. So I believe that hedging would be less in demand. I think hedging is very expensive. I think many exporters stopped hedge policy because, if you have negative interest rates and you let the FX go down, you wait to do their hedges. So, with the interest rates now, that should be starting to change. We should start seeing hedge policies that are not going to be any similar like they were in 2006 or 2010 but perhaps not like we have seen in the past 2 years because of the deleveraging and the cost of carrying those hedges, and also, due to the anticipation regarding the Brazilian elections. Last elections were highly volatile. I would believe that a good part of the hedging for dollar purchase has been done, and when we are thinking about selling dollars, that would have a very high carry cost. In the past 12 months, I think our carry cost went in a year of something around 1.5% to 3.5%. So that's a major difference. And I think things are slow, but we are going to have changes to the hedge policy. And the hedge policy for the banks, regulatory change that started last year, I think it was over 30 billion. So there was a deleveraging, there was a regulatory clean that ended up leading to a very increased dollar purchase. The central bank has hedged and donated that to the market, and we had a change in the FX exchange. Yes, and according to any metric that you consider, it doesn't matter if it's PPP or whatever, the currency is cheaper, something that we haven't seen in a long time. Even though inflation was high in the past 24 months, the currency is still cheap. Okay, thank you, Villa. Just a quick comment. For these pocket rules, I remember 6, 7 years ago, I would bring foreign people to visit Brazil, and people would be very upset with dinner prices here in Sao Paulo when compared to having dinner abroad. And Saturday, I was having dinner with my son. I got my calculator, and I thought that for this price in New York, perhaps I couldn't even get a drink at a restaurant, because this thing of Brazil being an expensive country, and thinking that, we should go to Miami to buy our baby layettes, that were ancient times. Now it's all different. We are now cheap, or at least as we should be. Now we are going to talk to Bruno Magalhães. I would like Bruno Magalhães to give us a new perspective. He has a new managing company. So there are no vices, no track record, nothing. It's a blank page that he can do with as he wishes. A lot of people dream of that. It should be very nice to do something like that. But on the other hand, starting from scratch also brings a number of risks. I mean, you have to start, you have to make a decision, you take people's money, and you have to do something, because the managing company is already 5 months old, and we have been very volatile since then. And the volatility has not only been in terms of price, but, I wanted to ask you a question in terms of positioning as a portfolio manager. How is the managing company positioning itself? What are you discussing in terms of scenario and strategy? And of course, we have to get it all agreed with the Russians. You have to come to agreement with all the parties about what is going to happen. But given your experience and the discussions that you're entertaining there, how did you start the fund? And then I have two other questions. How is 2022 going to start? I mean, we have P&L, we have to close the year. A lot of people are not going to do anything for the next few weeks, but January will come around the corner, and then you have to deliver your results and the quotas and everything. I believe that the first quarter is going to be a lot different from what it has been. The central bank high cycle should also finish more or less at the same time. We should see inflation dropping. We should see higher definition in terms of what, the election is going to be, if it's going to be polarized, not. Is it going to start badly and end better? Is it going to start better and end badly? Is it going to be a mixed bag? What can you tell us? Well, first of all, thank you very much for your invitation. It is a pleasure. As you said, I am one of the founding partners of External Capital, and I'm going to try and tell you a little bit about our story and our context and what our idea was in early August when we started running the fund, and how we have changed our mindset as market events developed. Early in August, when we started, we had a very cautious posture regarding Brazil. And what was the rationale behind this market vision? First of all, when we tried to understand what was the market narrative at the time, we realized that we had a very optimistic market, but they were optimistic thinking about the tax scenario, which of course, the tax numbers have improved, the fiscal numbers have improved, but there was no structuring behind that improvement. One of the reasons was that we had growth that surprised us positively, and there was more tax collection, but what really improved was a surprise that was very bad on the side of inflation. It seems to me that, it's been a year that in the turn of the year, our estimate for inflation by Focus and Brazilian Central Bank was 3.2, 3.3, and now actual is 11%. So a good part of the fiscal scenario improvement was due to that. We were still concerned about the fiscal scenario. We felt that at some point that would be problematic. We disagreed with the market narrative. The second aspect in the market that we also feel is very important, which is market positioning, technical positioning, to see if that could give us any kind of comfort or generate any discomforts. We were trying to understand what was the positioning of local funds. But local funds, as you know, grew a lot in the past years. Foreign investors took a step back from Brazil. So now that's a major price former. So when we were trying to think about the positioning of the industry, we were thinking about what the market was doing to understand the scenario, to understand the stance, and we were very well positioned with the Kit Brazil in August, all based on all that we had seen in terms of industry early on in the year, and a Selic rate at 2%. When we were going to support the third variable, that was a very important one, we also didn't have a very good reading. We are talking about a stock exchange at 125,000 points. We are talking about a GDP of 10, 11. So for me, this Brazilian history didn't even sound that high. But when you look at the figures with greater detail, and you discover that Vale and other companies had a major participation in the Bovespa portfolio, we felt that everything was very stretched. In the middle of the year, the FX was below 5, which was more or less the fair level. So should we have an FX at 5, or we wouldn't have carry with a currency that always offered great carry? We had inflation accelerating and negatively surprising the market, and the central bank that was perceived as behind the curve. So we were detaching from a positive market narrative. We didn't feel comfortable with the technical positioning of and that's what made us so cautious. 3-4 months have gone by ever since then. Lots have happened. And that's why our way of thinking is very different. I'm not optimistic about Brazil, but I have to say that a lot of things changed. I think the market was very surprised, particularly with the tax scenario, and they were surprised with the precatórios, and right after that, value above what the market was expecting for the emergency funds, Auxílio Brasil. The market was exaggerated. They looked at what was in the short term and extrapolated. The market really indeed needed to perform the way that it did. If we look at what was developed, if you think about things within the Brazilian budget, this is not a major number, and perhaps that's something that the market shouldn't be performing the way that it performed in September, October. But I think what we are left with the precatórios bill and all of that, I think what it's made evident is that the framework for the expenditure ceiling is very feeble. Whenever there is a demand for more expenditures, they go through the path of least resistance, which is increasing expenditures, approving a bill. The representatives were in full approval of that. So that evidences that there is a frailty in this threshold for the expenditures. I think we are still going to have that for a long time. So looking at our market positioning, we also believe that things changed. The fund industry that was very strong, there was a lot of inflow, but now, there's now a lot of outflow. That's not a source of concern. And when we think about that, we have to agree that the market indeed went through a major correction or adjustment. We are talking about, adjustments in the house of 20%. The FX was in an environment with a weak dollar, but at some point the real was performing very poorly. So in our mind nowadays, what can we do and how can we start this year of 2022? I believe that first and foremost, we are coming into an election year, and now I have trouble trying to think of Brazil structurally. Everything that we are doing here is short-term stuff. It's very hard to remember what's going to be next year. We are going to have a noisy, more volatile period with the elections. The last two presidential elections were very complicated with, the winning of a candidate that wasn't expected, and then this latest election with the attempt on Bolsonaro's life. I think with that, I'm less pessimistic than I was 4 years ago. Trying to think about being more constructive regarding Brazil, but with a lot of trouble and difficulty looking at that from a structural standpoint. Trying to talk a little bit more about the difference elements in a portfolio to start next year. Talking a little bit about the stock exchange, my perception probably is going to be similar to what Tony said. The stock exchange here in Brazil seems inexpensive, not low, but inexpensive. I believe that's going to be inexpensive, and it's going to be inexpensive for a while. I cannot see that in the short or medium term we are going to be able to get more consistent in the stock exchange. As I said, there is an electoral period. It's a very volatile year. So I believe our risk appetite is going to be reduced. Another driver that could potentially help the stock exchange has to do with growth activity, and I think in this case is going to be hindering. I think, the last analysis show a trend downwards. Even though when you look at that, and it wasn't so bad, Before the last figures, we had a projection of 3.5% lowering. That was the consensus of the focus report issued by the central bank. So it seems to me that an increase in terms, and we have to ask ourselves if the stock exchange is really inexpensive when we go from 1 to 12, 13%. We are looking at the rebalancing of portfolios. We have the leaving of equities to go to fixed income. And I believe that our industries like, stock funds that are suffering a lot. You have funds for dollars, fund for applications. In the end, we have to think about the impact in the market. Before, with the stock funds, everybody was buying equities. So I believe that we are very much hostages of this fund industry. And I don't think that's what's going to help the stock exchange. Another point is, if throughout 2021, we had a tailwind from the global market. I believe that this year we had 55 all-time highs this year. So that was a major improvement. But even so, Bolsa Brazil hasn't performed. So if we try to consider if the stock exchange is going to go up or down, I think it's going to be a lot more volatile for equities. So it seems to me that this is not necessarily going to help the stock exchange. And I believe that nowadays, the Brazilian market nowadays for the local investor, it's going to be handsomely paid to just sit and wait. The investor nowadays, different from last year, are being paid to wait for the best moment. As Tony said, I believe that the trigger is having a little bit more visibility regarding the electoral system, and we should consider a client that can question a supposed leadership ever since President Lula. I don't know if we are going to have that, but if we do, for sure it's not going to be before March. But I believe that we are being handsomely paid to wait. Now, speaking of the interest rates, I think it's a major challenge. Inflation has burst the ceiling. We are starting next year already at the ceiling. Brazil has a history of high inflation. If you think about it, it's 3%, 6%, even though there's a global event that all inflations are above the average. Here in Brazil, we're talking almost double the target for the years ahead. And I have a vision that's a little bit different from the market. As measured by the focus report, interest rates would continue to go up until 2025. So that's a major question mark, because it's not going to help us in terms of 2022 and 2023. And because the activities are surprising us lower, I think there's a perception in the market that we committed many mistakes in first year reporting that, and then I believe that they probably have an issue with overkill in the economy subworld. So for me, there's a major doubt. So I'm working with Selic a little bit lower, a couple of points lower than the focus report. Another big question that I have is regarding on how fast is the central bank going to be able to cut interest rates. Looking at the focus report, we see that they were supposed to have cuts in the end of the year. I think central bank will have trouble doing that. we have inflation targets 2025 and 2030. 25 would let us be condemned. I think we had a year of inflation below average. The market is very aggressive, and it shows a worsening in the tax or fiscal. And we were calculating the numbers, and we came to a number close to 4. So I think the Brazilian Central Bank will have a little bit more trouble cutting down the interest rate. And I think what we are really interested in promoting is the FX. Real has depreciated 15% in the past year. Historically, Real is currency that always had high levels of carry. We are now competing with other countries such as Mexico, Russia, South Africa. Before we had low carry fees than these countries. Now we have more. I think that's an important point. And according to the minutes of the last meeting at the central bank, I think for the first time we surprised the market in a more positive way. FX today is something that I think is valuable. We are focusing on paying this carry on. I think the cable has a bad use at the end of the year in terms of positioning oneself. And we have to take advantage of whatever is good at the beginning of the year to try and make money with the currency. I think the interesting aspect of this FX issue is that in the beginning of the year, there are two aspects that should be taken into consideration. The first thing is that we would be at the end of the cycle. The central bank would love to end the cycle there between March and April. And you would start the year with inflation expectancy that's already very high. So if there is a pressure for Real to be depreciated, I believe that we could have a Banco Central allowing that. You know, the strengthening, or we wouldn't, most important thing is the inflation expectations for 2023. Thank you, Bruno. I really liked what you said, that nowadays we are handsomely paid to take the risk. I always criticize that Brazil, good or bad, went through many crises throughout the years without many effects, downturns. Even in the critical years of 2015 and 16, the depreciation wasn't as big because perhaps the interest rates paid for the risk. So, you know, we might take lessons from this live broadcast, but I believe we could leave here with a more constructive view towards the exchange. Interest rates high, but not as high, but still a gain, according to Tony's point of view, which is something that I agree on. And still major challenges is an election year, and we know that next year is going to be a turbulent year for election. So I would like to thank you all for your participation on my behalf and the behalf of the bank, and let's organize other events in the future with your participation. Thank you very much.